So was this a big risk for investors that this co-president, co-CEO structure would last and create confusion and uncertainty for Goldman?
I'm not sure it was a big risk, but anytime you have certainty, I think that's going to be received well by the market. And so, as of Friday, there was a lot of uncertainty in terms of what the future of the firm was going to be. I think investors, even as of then, had some comfort that the ball was probably already moving forward here on succession planning. Lloyd's been the CEO for 12 years, been at the firm for 36. That's a long run, really, by any standards. And so, just that level of clarity that we got today of who it's going to be, I think that's comforting the market. And then it's unfortunate. I think Harvey Schwartz is well regarded by investors. He's been at the firm also a long time, and this is just kind of the natural, situation that happens when you have leadership changes. It kind of creates a chain reaction. I think we're seeing a little bit of that today, and it's all getting accelerated. I think we're maybe a little bit surprised by how fast this all developed, but I think the market is comfortable here, and the investor conversations we've had would suggest that as well.
Yeah, perhaps their hand forced by that Friday story. If you look at what the two men have been in charge of, Schwartz is the trading guy, Solomon is the investment banker. Take a look at the Bloomberg. We have the year-over-year percentage change on a quarterly basis. You've got investment banking in orange. You've got institutional client services, which includes trading, in white. On the right side of the screen, it tells a pretty clear story here. How much of this do you think was a function of the health of their respective businesses, and how much of it was a factor of their personalities and their positions in the firm?
Yeah, it's a great question. I mean, the way I look at it is that they both have very different backgrounds, and obviously one's more from trading, one's more from investment banking. Investment banking's been a great story, but I think in terms of where the firm is going, which is really, if you're looking to bring in a leader of the firm, for where the next generation of the company is going to be, that's, I think, what the decision's about here. And I think they both would have been well suited for that position, but you think about the next probably 10 years of the company, it's much more towards digitizing the underlying framework of the company. It's about pushing harder into lending. With Marcus is kind of the first iteration of that on the retail side. You have a lot more effort on the retail wealth management side, and I think all those things both individuals have been very involved in, but I think David, he knows clients very well. He's been at the company for almost 20 years, and so he's well suited to do it as well.
When would you expect to see some of these new digital initiatives start to move the dial at Goldman?
It's another good question. I mean, I think we're already seeing the underlying impact of the firm. I mean, a lot of them are not instant gratification. You have, Marcus itself is really a digital backbone, consumer lending platform, and that is already starting to move the needle, and they're gaining traction there. They're doing a heck of a lot of things on the retail wealth management side. And one point that I think maybe gets missed here is, almost a third of the company is either programmers or engineers. Yeah. And so, this really is a firm that is evolving towards technology, towards digital. I think they are on the front-facing part of the industry around that, and I think that's a little bit underappreciated, actually.